All right. Good afternoon or good morning, everyone, depending on where you're joining us from here today. My name's Scott Taft, one of the business development consultants here at Baird, and want to welcome you to this month's Baird Wealth Strategies webinar. Our topic today is going to focus on navigating tricky waters out in the economy and the investment space with Baird's market strategist, Michael Antonelli. And we are guaranteed to have a lively discussion. It's the only kind you can have with Michael, which is going to be great, on not only to think about or how to think about the markets and investing, but also easy steps you can take to improve your overall well-being. And if you're not familiar with Michael, he's a market strategist who graduated from Purdue University in 1995. So go Boilermakers. Has had a number of positions in sales and trading, and really has worked in options and futures, but joined Baird in 2007 on the equity trading desk as a part of the international team. But I think all of that does a great injustice to really one of the X factors that God blessed Michael with, and that's his ability to make the complex and esoteric very simple and easy to understand, and to do it with a lot of energy. He's been featured on CNBC and a number of other media outlets. He's author of the Bull and Baird blog, which you can find online, as well as you can find him on Twitter, YouTube, and a number of other publications that are out there as well. And for those of you that have read a book called The Energy Bust by John Gordon, John talks about two different types of people. He talks about energy vampires and energy givers. Some people can suck the life out of you and just leave you feeling drained after a conversation. Some people leave you with more energy than when you got to the conversation. Michael doesn't just fall into the energy givers bucket. He does a cannonball right into the middle of it. And I think you're going to leave this discussion feeling even better than you did before. But before I turn the call over to Michael, a few housekeeping items I just want to highlight here real quick. Number one, for optimal viewing, we would highly suggest that you just set your layout to the side-by-side view via the circle in the upper right-hand corner of your screen. And everybody who is participating here as a part of this webinar is in a listen-only mode, but that doesn't mean that we don't want to hear from you. It just means the way we're going to do this is after Michael finishes speaking, we're going to have a Q&A session to address as many questions as time permits. And when you do that, you can submit a question through the Q&A icon that's on your screen. And please make sure you address your questions to the all panelists view for us to be able to do that. Lastly, this presentation is being recorded. It'll be made available along with the slide deck through your Baird Financial Advisor about a week following today's call. But with that, again, I want to thank you for joining us today. And I'll now turn the call over to Michael. The floor is yours.
Boy, what a fantastic intro. Are you kidding me? That's one of the best intros I've ever got. Scott, you set the bar high for all future webinars and client events. So I am so excited to be here. It's January 19th. It's the start of a brand new year. We got so many things we can talk about. We're going to talk for about 30 to 40 minutes here. There is opportunity for Q&A at the end. If you would like to ask a question, just throw it in the Q&A box right there on WebEx. If you'd like to ask your advisor a question, they will email it to me and I will get back to you on a personalized basis. So either way, if you want to be part of this conversation, if you want to ask a question, please do. There's 416 people in here right now. That is by far the largest WebEx I've ever done. And I've been doing these since COVID started, and I did a couple of them kind of before COVID started. So I thank every single one of you for being here. 427, it's going up, it's ticking up. We got some momentum here, and I think about 1,000 people registered. So if you're watching this live, thank you, and if you're watching it later, I also welcome you, and thanks for spending some time with me here today. So we are going to do 4 things today. All right, we're going to try to do 4 things in 30 minutes. That's a lot. It's a lot, but I'm going to bring you, I promise you, I'm going to bring you a lot of energy, a lot of things to think about as we kind of go forward through this year. There's 4 things we're going to talk about. First, I'm going to give you a story about predictions because I am a storyteller. I think that's how human beings learn. I'm convinced of that fact. Then we're going to talk a little bit about COVID, how it's kind of broken the world and what that means to you. And we'll talk about the market, just real briefly about the market, how you should be thinking about it at all times, essentially. Then I'm going to talk to you a little bit about your well-being. I think it's important. I think you've engaged us to talk about your financial well-being. Let's also talk about your overall well-being in kind of an easy way to kind of improve that as we're going through this year. I'm going to first start with this slide because I love this slide. Let me also say before I start, this deck, okay, my friends, this slide deck has no charts in it. None. 0 charts. It is one of my career goals this year to present to our wealth management clients with no charts because I think numbers and charts really don't show people what they need to know. Stories do, talking about what's important does, not the chart of gold or GDP or S&P 500 earnings. I have no charts, and that's what I think sets me apart from kind of the other thought leaders that we have here at Baird. I want to talk to you about your behavior. And if you remember the Ever Given, that ship that kind of wedged itself in the Suez Canal last year, and they sent this one digger to try to dig the Ever Given out, it became one of the biggest memes of last year. And so my webinar is up against human behavior. It's up against your behavior, and I'm just one tiny little I'm just one tiny little digger up against how humans actually act. So that's what my style, that's what my event is. It's going to be focused on human behavior. But let me start with a story about predictions. Okay, we're going to start with a story because you may have come to this and said, oh, I hope Mike predicts the future for me. I hope Mike predicts where the market's going. I hope Mike predicts what's going to happen with COVID. I'm going to tell you a story about predictions here and just how hard they are. So this man you see on the screen right here, that's Dean Kamen. So Dean Kamen was an inventor in the early part of the new century. So about 2001, January 2001, Dean Kamen came up with an invention that was set to revolutionize humanity. Okay, John Doerr, who runs Kleiner Perkins is a huge investment fund, said that this would be the largest investment in the firm's history. He thought that this invention would be more important than the internet. Okay, he thought Dean Kamen's his invention would be more important than the internet. And it would Credit Suisse, another investor, said it would be the fastest startup to reach 1 billion in revenue. People, institutional money, super smart money, thought this would be a revolutionary invention. In fact, Steve Jobs wanted to invest 60 million in it, and Kamen turned it down because he just didn't want to lose control of it. Didn't want to lose control of this invention. So news of this invention breaks in a secret book proposal that got sold to Harvard Business School. The proposal quoted Steve Jobs saying that this would be as significant as the personal computer. And if enough people will see this machine, you won't have to convince them that cities will just be built around this. And Jeff Bezos, the guy who founded Amazon, super successful investor and founder, said, "This product is so revolutionary, you'll have absolutely no problem selling it." Okay, so this was the smartest people in the world. Okay, the smartest, and they said that this guy's invention would literally change the world. They were making a prediction about what might happen with Dean Kamen's invention. And then in December of 2001, this invention is shown on Good Morning America. And this ended up being it. This was the invention that the smartest money in the world thought would literally change the face of humanity. It was the Segway. That's Dean Kamen riding on the Segway. That's Jeff Bezos standing right in front of him in New York. So why am I telling you this story? I'm telling you this story to remind you that predictions are impossible, especially predictions about the future. The smartest people who were investing millions and millions of dollars in Dean Kamen said this would change the face of humanity. And we ended up, have you ever ridden one in your life? I never have. I've never been on a Segway in my life. I've seen lots of fail videos about Segways, but I've never actually seen somebody ride one. So Daniel Kahneman, who's one of my heroes, he's a behavioral finance guy. He said the world's incomprehensible. It's not the fault of pundits. It's the fault of the world. It's just too complicated to predict. It's too complicated, and luck just plays an enormously important role in it. So if you came here to hear me predict the future about the stock market, I can't predict the future any more than Steve Jobs, Jeff Bezos, and John Doerr of Kleiner Perkins could predict the future of what Dean Kamen was creating. It's just impossible. It's incomprehensible. But that's okay. We don't have to know what the future holds to do well in it. We don't. I'm going to teach you when we get to the market segment what you kind of really need to know. I have another great story for you about mountain climbers because I think that's one of the things that's the best parallels to an investor. So let's just step back for a second and realize that the world has broken, right? The world has broken. In 2020, the world flat out broke. We had a crisis, COVID. And there's about 4 things that COVID broke that are never going to come back. They're never going to go back to normal. In fact, when you think about the world, when you think about history, there's something I want you to remind you is that, the world can work one way for a long time and then boom, abruptly lurches in a new direction. That's just how history's always worked. There's all sorts of events that have changed the course of history. Think of the Great Chicago Fire, World War II. Think about the Halifax explosion off the coast of Halifax in the early part of the 20th century. The world abruptly lurches in different directions all the time, and that's just how it will always be. The problem is our opinions crawl while events leap. Okay, our opinions about the world change very slowly while the world leaps ahead of time. And remember, by the time one problem ends, a new one has already arrived. If you think, oh my gosh, I can't wait till COVID ends, I'm going to go back to the world that I started from, you're thinking about the world wrong, right? Once one problem ends, another one will have arrived. There's no glorious time here where everybody can relax. Just never's been like that ever. So if you think that COVID will just end and we're going to go back to the way the world was pre-2020, you're wrong. But that's okay. That's okay, because that's always how history has happened. In fact, there's 4 things that COVID has kind of changed about our world that will never go back to normal. COVID kind of broke the wage structure of the United States. When you think about what the minimum wage is, it's set at 7.25. The national minimum wage is set at 7.25. But if you were to drive up and down any street in your neighborhood, or if you were to drive in the streets of Wisconsin or up and down these highways, you'd see that companies are hiring for, what is it, 15, 17, 18? You probably can't hire a worker below 15 right now. COVID kind of broke the wage structure because it put everybody in their homes. And then we kind of stimulated them with money. That was one of the other things that we did. We handed out stimulus checks to our citizens. 2 under President Trump, 1 under President Biden. And that money and COVID and the kind of way the world broke made people just rethink about their lives. What do I want to do? What was I working at before? Do I still want to do that? And the wage structure of the United States has been completely broken. And it's not going back to normal. We're not going to go back to what it was pre-2020. The minimum wage in the US is probably 15 right now. Maybe it's 16. But that's actually good for society as a whole. When the bottom end of society makes more money, when those entry-level jobs make more money, that's good for society as a whole. So we broke the wage structure of the United States. We started handing money to our citizens. Do we do that in the future? When we have a drawdown, maybe we do. Maybe we do have some sort of program that kicks in when we have economic recessions or economic catastrophes. So the third way that COVID broke the world is work from home, right? A lot of white collar workers can work from home now. And we've been doing it for over 2 years. When you do something for long enough like that, it just becomes your new normal. It just becomes the way the world is. You don't go back to the previous version of the world. In fact, when you think about the company you work for, or companies you may want to work for, you want companies that are forward-looking. How do I embrace the future, not try to recreate the past? Work from home now lets people work anywhere in the nation, maybe anywhere in the world. No longer is talent dominated by New York and San Francisco and Boston. Talent can now be spread everywhere. And that helps housing too. Instead of having to cram into housing outside New York or San Francisco, maybe workers can live in Boise and Austin and Wisconsin. Maybe you can live anywhere now. So that kind of spreads out talent all over the country. That's just a massive change. And then the last one is, our supply chains have been kind of broken. We had this notion where we could just kind of get our stuff just in time. We get our inventory just in time and then make our goods. And supply chains have been broken by COVID. And the fact that people are demanding more goods and services now. They're a little richer. Their asset prices are up. Home prices are up. So demand is really high. Our supply chains can't meet that. We need to find a way to kind of reboot these supply chains. So it's going to take a while. It's absolutely going to take a while. But as I kind of transition out of this section into the market section, which I hope you're all kind of interested to hear, just remember, like I said, history lurches, okay? History lurches in new directions quickly. Don't think that we're going back to the previous version of the world, because we're not. We never have. Think about how much 9/11 changed the world. Think about how much World War II changed the world. Think about how much the Great Depression changed the world. That's how it works. You just have to embrace the fact that the future's uncertain. And we talk about uncertainty. Let's talk about the market, because I'm going to kind of lean very heavily, okay? I'm going to lean very, very heavily into behavioral finance here, because it's my passion, and I think that it's what you need to know to be a successful investor. Look at this tweet by my friend Joy Lear. I've spent a bunch of time studying with Joy. She's a clinical psychologist. You think, why would a market strategist spend a bunch of time studying with a clinical psychologist? Well, I truly believe that better understanding how people think is the key to helping them to be better investors. I mean, I could pour the Black-Scholes formula into you, but it's not going to make you a better investor. I could teach you about, the weighted average cost of capital. It's not going to make you a better investor. But if I can understand psychology a bit more, it will make you a better investor. The discipline which is most important in investing is not accounting or economics, but psychology. Howard Marks, by the way, is one of the most successful investors of all time. Anybody would kill to have Howard Marks' track record as an investor. And that quote is 100% true. As you seek to become not only a better investor, but try to understand the world more, you have to understand that everything kind of in between your ears is really what dominates. Really, really, really what dominates your success. It really does. And I'm going to give you an example, okay? Let me give you an example. I thought this cartoon was great. I really thought this cartoon was great. I see a lot in our clients. And in the world, in interactions with my friends or maybe family or just, strangers, that bad news is really dominates people's mind. Like bad news, think catastrophes, the dollar's going to implode, the national debt's too high, COVID, like bad news really, really tends to dominate people's mind. And that it bums me out for a couple of reasons. Number one is that this is probably me on the left there, that bullish newsletter writer. I tend to write in a very optimistic way. Go on my blog, Bull and Baird, and read my stuff. I tend to write thinking that the future is going to be better than the past. And I truly believe that is the case. But bearish newsletters dominate people's minds. In fact, so much so that it's probably at the detriment of my career and my social audience that I'm not bearish. Because people line up to hear bad news because they think that person must really know something. That person must really care. If I had made this whole event about kind of how the market's going to crash and how I'm worried about the future, I bet my audience would triple. I bet I could go on social media and probably triple my audience by being negative. But you know what? I'm here to tell you right now, if you want an ideal way to go broke, it's to be a pessimist. I think that's about the most ideal way I know to go broke, is to be a pessimist. Being an optimist it should be kind of your fundamental mindset as you kind of go through life, not only business and investments, but your life in general. More people wake up every day trying to make the world better than make it worse. That's true. So the New York Fed, okay, the New York Fed is this entity who surveys consumers every single month, okay? And they ask them this great question. They say, will the stock market be higher or lower in the next 12 months? Okay, they've been asking this question since June of 2013, okay? So they've been asking this question a little less than a decade, okay? There's only one instance, one, since June of 2013, where people answered the question, will the stock market be higher in 12 months' time? There's only once where the majority said yes. Once since June of 2013. It was actually April of 2020, which God bless them. I mean, that they thought the market would be higher after that crash. Incredible. But back to my point, okay? My point is people are always bearish. Always. Since June of 2013, the majority of people surveyed by the New York Fed have said the stock market will be lower over the next 12 months. Do you know what the stock market's done since June of 2013? You know what it's done? It's essentially turned 10,000 into a little under 40,000. The stock market since June of 2013 has been one of the best in history. And every single month, people think it's going to be lower in 12 months' time because they're reading bearish newsletters. They're talking to bearish people. Their buddy at the club said the stock market's going to go down. Bearishness kind of dominates, okay? It really, really dominates because people's views of the world tend to cloud them, okay? They tend to cloud them. Let me tell you something, all right? You need to accept that what's rational to one person could be crazy to another, all right? Everything in the world would compute if everybody had the same time horizons and goals and ambitions and risk tolerances. It would all make sense if we all shared the same views, but we don't. My view is different than your view. Your view is different than your neighbor's view. Your neighbor's view is different than your sister or brother's view. Okay? Panic selling stocks because they've declined 5% would be a terrible idea if you're a long-term investor. But it's a career imperative if you're a professional trader. Okay? Let me just wrap up before I move on to the next slide. There's no world, okay, which every investing decision you make, okay, and you see that should align with your view of the world. Say that again. There's no world in which every investing decision you see should align with your own view of the world. You think of the world differently than somebody else. When you see the market do something, it's not going to align with your worldview, but that doesn't mean that you're wrong or they're wrong. It's just people operating under different games, okay? Investors range from 19 years old, learn how to day trade, all the way to endowments who have literally time horizons that are infinite. But then we look at one benchmark. We look at the market. How have you performed over the last 365 days? Can we just not imagine a world where different people have different goals stemming from different games that they're playing? You're never going to be able to look at something the same way as everybody else. Your goals are different than mine. That will always be the case. You just have to accept that people are playing different games in the stock market. You don't have to play their game. Just play your game. So there's this kind of exciting world of mountain climbing that you could run into on Netflix or on YouTube or on Amazon Prime. I spent some of the time during the end of last year as we were in the holiday season kind of going through some of these because, you know, I listen, I'm a 48-year-old market strategist. I have 2 kids and a wife, and I don't go mountain climbing. Okay, I don't. All right, I'll probably never go mountain climbing. But when you watch it on TV, I sit there in awe of these people who are just climbing up rock faces where they're just holding on by, you know, a crampon or they're holding on by their hands, and just death is literally just, you know, a slip away. And I sat there and I was watching this one called The Alpinist. You can catch it on Netflix. It's really good. I highly, highly recommend it. I was watching this Alpinist, and the wisdom of it just kept pouring over me about the stock market and about investors, about you, my dear friend who's joined me here today. The wisdom about you and me was just pouring over me, so much so that I had to put it in this event. I had to put this in terms I think that we could all understand. So, the title of this presentation was Navigating Tricky Waters. And that's kind of one of the things that I'm trying to help you do by reminding you that the world's a complex place. Nobody can predict the future, that what matters really is what your goals are and what your plan is. So M. Scott Peck. So M. Scott Peck wrote, he's an American psychiatrist. He wrote the book, The Road Less Traveled. He said this, and we're going to try to talk about mountain climbers versus you as an investor. Okay. He said this, he says, courage is not the absence of fear. It is the making of action in spite of fear, the moving out against the resistance engendered by fear into the unknown and into the future. So think about this. Think about that as you stand right now and that quote. Think about the mountain climbers, okay? Mountain climbers and you do, as an investor, do two things the same, okay? You plot a course. What is my course into the future? What is this plan? They plan. You plot a course. You plan. You know what success looks like. Mountain climbers know what success looks like. So do you. They accept that failure is possible. Okay? A mountain climber accepts that failure is possible. They know that they're going to have to adapt along the way. No matter what they do, they have to adapt along the way. Their hand might slip. The foot might slip. Maybe the wind comes in. Maybe the weather changes. Maybe with the course that they took and the plan that they took needs to be altered slightly. They know they'll have to adapt along the way. And they know that managing fear is the key to their success. They know that. All of these things that the mountain climbers do are what you need to do to be a good investor. Remember, I'm not sitting here telling you need to go study the markets or you need to go learn what interest rate expectations are. I'm telling you the behavioral things that are important here, okay? Personal finance, all personal finance, my friends, is just an exercise in mistake management. Much, much more so than a pursuit of perfection. Just like the mountain climbers. They're managing mistakes along the way. They know what success looks like. They know they'll have to adapt along the way. You need to just be a little less wrong, and then you will be one of the best investors, okay? You just need to be a little less wrong. Do you know how you're a little less wrong? You don't sell when your buddy says the national debt's too high. You don't sell when a news channel tells you that things are going bad. You don't sell because you're afraid of something that the market already knows about. Just like a mountain climber, you need to be able to adapt along the way. So before I move on, I really, really want you to go check out one of these two movies. I mean, I promise you, the thrill alone of it is just, as somebody who works at a desk and, and essentially, talks about markets and investing, these kind of things really move me because I can see the parallels between you and me and investing and life. No matter what you do, the future is going to be uncertain, just like a rock climber's future is uncertain. I want you to know that managing fear, it's the whole ballgame for you. That's psychological. That's not accounting or finance. It's psychological. So you've come here to kind of hear my view about the market. Let me just kind of give you my quick view of the market. Our friends at Strategist, who are Baird's investment strategy arm, they think that the stock market has some headwinds this year, midterm elections, interest rate hikes. They think that, going to be a difficult, rocky path, probably see a sell-off sometime during the year, and then ending the year probably with a, kind of mid to high single digit return. And that view of the market, I think jives a lot with what I view also, which is we know that midterm election years tend to be rocky. We know that, okay? The average sell-off in a midterm election year is about 17%, if you were to go back in history. The Federal Reserve, is about to hike rates. That generally tends to be bad for stocks in the short run. You're seeing that a little bit of that now in the stock market. The start of the year hasn't been all that great. But while these things are short-term headwinds, they generally tend to resolve themselves over the longer run. So what I want to tell you is that, yes, I think this year is going to start rocky. I think the Fed's going to have to hike rates. Inflation's out of control. There's a midterm election that also introduces kind of a level of market fear. I think that we probably will have some sort of sell-off during the year and that this year will be more difficult than others. But I want to remind you, and this is wild, guys. This is really wild. You're essentially going through the second best bull market in history. In fact, if I was a retiree, if I was a baby boomer, if I say I was in my 65 plus, I would literally I would be going, this is unbelievable how good this is in. If you think about the last 11 years of the stock market, past 11 years, there's only been one down year. Okay, since 2010, there's only been one down year, and that was down 4% in 2018. Just one. The last 3 years in a row, do you know what the last 3 years the S&P 500 has done? Plus 31%, plus 18%, plus 29%. Some people say 2021 last year was the second best stock market year in history. There were 70 new all-time highs last year. That's more than the 1970s and the 2000s combined. 2 decades. Last year had more all-time highs than those 2 decades combined. And there was only one 5% drawdown last year. You lived through the second best year probably in history last year. If you didn't like participate in that, if you're not building your wealth through this incredible bull market, then we need to look inward. What are the mistakes we're making? How can we fix them? How can we make sure that if the market keeps going, that I get to participate in it? Guys, this is honestly is really an unbelievable wealth creation period. Honestly, I keep thinking back to baby boomers. Like, you know what the best bull market was? One of the best periods to grow wealth, the 80s and 90s. That's when the kind of the baby boomers were in their prime. And now as the baby boomers are in retirement, they're getting the second best bull market in history. Incredible. Like, it's just, as a Gen Xer, I got that 2000 to 2013 period where stocks went nowhere, kind of the prime of my career. And that really bums me out. So I think this year is going to be a little bit of a struggle. I think we will get a sell-off this year. I think we'll probably see something in the 15% range intra-year. I think we'll probably see a decent-sized sell-off. We haven't had one in a while. It's been close to 400 days without a 10% sell-off. But is what I'm saying here a reason to do something? If I say that I think the market's going to sell off 15% at some point this year, is that a reason for you to do something? Well, when I say that, all I'm telling you is what the average stock market pullback is in any given year. The average pullback is about 14% in any given year. Okay? Pick any year out of a hat. The stock market on average sells off about 14% in any given year. Should you do something about that? Well, there's a couple things you could do. Number one is called rebalancing. Okay? Rebalancing. Talk to your advisor. What are we rebalancing? Are we rebalancing quarterly, annually, semi-annually? Rebalance your portfolio. That way, if stocks fall and bonds rise, you can rebalance. You're buying low, selling high. That's the point of this, right? But if you say, I want to go to cash because Mike said that there's going to be a sell-off, it's a colossal mistake. I think it's a colossal mistake because, A, you can't time the market. You're just introducing more ways to be wrong. What if I'm wrong? What if the stock market doesn't sell off this year? You're getting no more compounding or dividends. When you're out of the stock market and you're in cash, inflation's destroying it. If you have $1 million in cash, inflation's eating $70,000 of it a year right now. Cash is being destroyed by inflation. Stop thinking of the market as all in or all out. It's all about tweaks, okay? It's all about tweaks. That's one of the lessons I also want to teach you. And then I'm going to give you one last tip here before I move on to my kind of wellness section. When you go to a doctor or we read mental health or you read wellness experts, they say you should sleep 8 hours a day. And that's great, right? We should all sleep 8 hours a day. I would love to get 8 hours of sleep. It sounds simple, right? It sounds so simple, you probably just ignore it. Somebody told me to get more sleep. That'll make me, that'll improve my overall well-being. It's so simple, you probably ignore it. Hey, what's the complex answer? What are the 6 or 7 things that are complex that I could do when we really should be paying attention to simple answers? Those are the things that work in life. So if I tell you to sleep 8 hours, and that's a simple way for you to improve your life, here's the simple way to improve your investing. And I'm sorry it has to be this way. I really am. And the answer is just be more patient. Be more patient investing is the sleep 8 hours of health, right? It sounds simple to take anything seriously, but it probably will make a bigger difference than anything else you do. I'm sorry, but that's just kind of how it is. You need to understand that the market sells off every year. It goes up and down all the time. In fact, if the market only went straight up, it would get expensive. And expensive things are prone to crashing. It can't go straight up. It absolutely cannot. So I want you to remember that when you're thinking about the stock market, it's not about numbers. It's not about what Mike or anybody thinks what GDP or interest rates or what the election will do. It's not. It never has been. It's always about how you navigate the mountain. It's always about, can you adapt and can you learn to live with fear? Because that's how mountain climbers are successful. And that's how you will be successful as an investor. Learn to live with the fact that the stock market goes down every now and then. Just learn to live with it, okay? And if you do, if that's what you take away from this, then thank you for coming to Baird and you will be such a successful investor. So let me kind of shift gears now to talk to you a little bit just about your overall well-being, because it's important to me. You come to us to talk about money, but you've also come to talk to us about a holistic life. Just a life that's meaningful, right? A life that's important to you as a person, your family, your spouse, yourself. Um, I want to just talk to you really quickly about just a couple little tips and tricks that I think are important here. If you were to think about your overall well-being, okay, if you were to think about yourself as a person, there's kind of four forms, okay, of overall well-being: physical, spiritual, emotional, and financial. Those are kind of your four forms of well-being. So physical is kind of, exercise, sleep, nutrition, access to medical care, absence of kind of pain or disease. Uh, Emotional is kind of your identity, right? Self-esteem, being resilient, relationships, intimacy. Those are all the things that kind of make up emotional well-being. And spiritual is kind of community, right? Beliefs, values, connection to your culture. And then financial, we'll talk about financial in a second. You've kind of, you've engaged with us to help manage and improve your financial well-being. But here's the thing about these four. I kind of mentioned them so you can think about, are you lacking in any of these? Are some of these harder for you than others? Because the problem is that they're all interconnected. They're all interconnected. Your well-being, they're not independent of each other. They're all interconnected. If you're in really good emotional and spiritual and financial shape, but you're weak and your body's, you wake up and you're painful every day, that detracts from your overall well-being. If you're strong and your spiritual beliefs are high, and your emotional state of being is very sound, but you're struggling with money, it kind of impacts you. All four of these impact you. You need to honestly work on kind of all four of them at the same time. So, let's just focus on financial well-being for a second, which is what you've kind of hired us to do. I want you to think about it in four ways here. It's pay the bills. Can you pay the bills? Are you staying safe? Are you able to kind of deal with financial emergencies? Are you achieving your goals that you've kind of laid out to us? And then this last one, I just want to talk real briefly about these. You probably engage with your advisor about the three of the four here, right? Paying the bills, insurance, and staying safe, and kind of achieving your goals. You probably engage with your Baird advisor about all three of these, but the fourth one is one that really, really occupies my mind a lot. It occupies my mind a great amount, and I hope it is something that you think about from time to time. Is what is kind of your view on pursuing a meaningful life? My friend Brian Portnoy coined this term, fun and contentment. I think it's a good term. It kind of means, being able to afford a life that's meaningful to you on kind of your own terms, okay? A larger sense of purpose or kind of reason for being in alignment with one's personal finances. And you can think about fun and contentment as much as about avoiding regrets as it is kind of increasing your pleasure and happiness. When you engage with a financial advisor, especially here at Baird, and I'm passionate about this again with not only you, but with our advisors in and of themselves, like, you need to focus on that last one quite a bit. You really do. Like, we can help you reach goals, but contentment with life, contentment with what you're going through, it's tough to find, or you have to really think about it, right? Instead of asking like what your goals are, I would kind of ask you, who do you want to be? Who do you want to be as you go through life, as you go through retirement, as you kind of shift gears from working to retirement, if you're in retirement? All these things are on my mind because this is more than just about money, my friends. I mean, as much as money kind of dominates our interactions or conversations, like this, there's so much more to life than just worried about money or worried about where the stock market's going. It's really about these kind of four overall components of your well-being. And I want you to kind of make it important this year that you think about these four, right? Just think about them. Are there any that you're kind of lacking? Can we help you? Is there a way that we can kind of make our relationships deeper and more meaningful between us? Because if one of these you're struggling with one of these, it's going to impact all the other ones. It will. They do not exist independent of each other. This is a great book I would love for you to read. Okay, I would love for you to read this book. It's called Atomic Habits by James Clear. Write this one down. This is a really good book if you're looking for like a really kind of revolutionary way to think about the world. And in Atomic Habits, there's various chapters. I thought this one was very interesting because I'm gonna kind of end on one more slide here, and then I'll take some Q&A. There are a couple questions in here, so again, this is your chance to ask a question. We'll get there in maybe like 5 minutes from now, but this is one of the chapters in Atomic Habits. It says, start small. You cannot improvise a habit that does not exist. You can't just try to work out if the habit doesn't exist. You can't just try to read a new book if you're never reading a book, right? But just start small at the very, very smallest level. That is when you start to build a habit. 5 push-ups a day, just 5 reps a day of something. 3 pages a day of a book. Just read 1 page a day of a book. 3 pages a day of a book. 5 words a day. If you're trying to learn a new language, just learn 5 new words a day. In Atomic Habits, you can't start to improve your life by eating a big chunk of something. You have to start very, very small, which is where I'm going to transition here into talking to you about 2 things I think can improve your life immediately. Okay, 2 things. I'm going to tell you on my next slide what they are. You can do these today. And I want you to kind of think about them as you think about those kind of 4 overall components of your well-being as a person. There's 2 things I think you can do today that are really, really easy. Okay, 2 ways to improve your life today. Number 1, it's as simple as it gets. Remember, I made the argument that simple in investing is the key to your success. Be more patient. Simple, simple, simple walking. Okay, let me make the case that just starting to walk more will immediately improve your overall well-being. Walking improves fitness, cardiac health. It alleviates depression and fatigue. It improves your mood, creates less stress on joints, reduces pain, can prevent weight gain, reduces risk for cancer and chronic disease, improves endurance, circulation, and posture. Psychologists found that a 10-minute walk, 10 minutes, is just as good as a 45-minute workout when it comes to relieving the symptoms of anxiety. The amount of science and the amount of improvement from a simple walk is staggering. But just like I said with being more patient, people tend to ignore simple things. I don't know why. People want complex answers. How do I improve my overall well-being? Do this 48-course diet plus workout regime. How many people are going to stick to that? 0. How do I improve my physical well-being? Walk 10 to 15 minutes a day every day. It's simple and it works. It's literally doctor studied. Psychologists study it. I found during COVID that taking a walk around the block improved my mental well-being dramatically because, March of 2020, the market was crashing and I was in my home. I'd never worked out of my home before. My family was all with me, which is important, but everything's kind of compacted on each other. Just a walk around the block listening to yacht rock, which, again, the best music of all time. I found that to be extremely stress relieving. And I want you to really think about simple answers here. Simple. Okay. This is one of them. And my second one is my pinned tweet. If you go on Twitter and you look at my Twitter account, this image is my pinned tweet. Now just take it in for a second. And I want you to think about what is this cartoon telling us? What is the cartoon's lesson? Okay. This person is sitting under sunny skies with an umbrella up and a raincoat and their rain boots. And they're looking at a TV showing a rainstorm. What's the lesson from this? And what am I going to tell you is another simple way to improve your life? That is, just consume less news. Just watch less news. Consume less negativity. Because when you're reading something or watching the news, they're selling you something, okay? They're selling you the whole time. Think about your favorite news channel that you might watch every night. And do you come away from that more negative on the world or more positive on the world? If you come away more negative, that's their goal. Their goal is to get you to constantly watch, which means they're going to be as negative as they can because you need to be worried about something. They're not going to you'll never go on the news and hear that 2.2 million planes successfully landed today. You'll never go on the news and hear that 1.4 million cars successfully arrived at their home every day. You won't. Because you would stop watching, right? They're just going to fill your head with negativity so you watch more. If you read a blog about the national debt or about the dollar collapsing or about a bear market, they're selling to you. They're selling so you keep buying their blog or you keep reading their blog. Again, I'm doing this probably to detriment to my audience. I'm not a negative guy. I don't think that's the right way to go through life, especially as an investor. Again, optimists for the last 10 years have just minted money. Okay? Optimists, not pessimists. Okay? I don't want you to go through life being negative. Look at this cartoon. Consume less news. When you start your day with news, you're starting your day on someone else's agenda. When you start your day on email, you're starting your day with somebody's instructions. Start your day on your own terms. If that's a cup of coffee and a walk, you have started your day on the best possible terms, your terms. Okay? 2 simple ways to start to work on that overall well-being. And believe me, I would absolutely love to say that I do these things every single day. My wife would probably say that I don't, and that I should, physician heal thyself. But I do work on these every day. I do work on these because I think they're important. And I think that, again, as you engage with us about the markets, as you engage with us about your future and your planning, there's lots to think about. Okay, there's lots and lots and lots to think about. When you think about the market, when you think about investing, all of it is about psychology. All of it. It's not about predictions. We know that predictions can be fraught. Okay, it's not about what Mike Antonelli or somebody else thinks the market might go. Nobody knows the future. Okay, think like the mountain climber. Have a plan. Adapt along the way. Manage your fear. You get to the top of the mountain and you reap all the rewards. You're not going to get to the top of the mountain of investing with a chart of GDP in your hands, or a chart of copper prices, or a chart of earnings estimates. You won't get to the top of that mountain because those are meaningless. Okay? The future's unknowable. Things change so fast. In fact, once COVID's over, something else will show up. It's always how it's been. Okay? And Scott, we got a couple questions. I'm just going to get to them really quickly, and then I'll kick it back to you. There's 2. Is there 3? Maybe there's more than 2. There's only 2 right now. Again, this is your chance, or you can email me. I would love to have you email me a question too. I won't divulge your name at all. So, the first question is talking about the midterms, particularly with the midterm elections. We know those are coming up this year. Is there a general time when the overall rise and falls occurs for midterm years? Not trying to predict dates of when to buy low or sell high, but months or season in terms of midterm years. So there isn't. There's no kind of consistency of if there's going to be a market sell-off, when does it come? Okay. There's something I want you to remember about the market, and that it's constantly thinking about the future. Okay? The market discounts the future, and it's constantly thinking about it. What will the makeup of the House and Senate be? What will the laws? What might the laws be? Who might control this? Who might control that? So it's constantly thinking of those, and it's adapting nonstop to that information. So as the polls kind of rise and fall, as a party's favors go up, as a party's fortunes go up and down, the market will adapt along the way. And I think that it's not necessarily true that there will be a sell-off this year. Again, I don't know the future. When I think about the stock market, I think about 2 things: possibility and probability. What's the possibility of something happening, and what's the probability of it happening? Those are 2 very important things. Those are the right ways to think about the market. So it's possible that the market sells off this year because of the midterms. Is it probable? Well, it's probably slightly more probable than any other year, given that history has shown that to be the case. I wish there was a great answer for this, but there isn't. But I want you guys to be prepared for that fact. You've heard it here today. So if it does happen, you can go to your advisor and say, look, Mike talked about that in his event. Yeah, I know this is going to happen. Maybe we rebalance right now. The market's down. Maybe let's take this chance to rebalance. There are things you can do that make sense, but one of them is not to sell out of the market and wait. To me, that makes no sense whatsoever. That's just not how the best investors work. And you're just introducing opportunities for you to make a catastrophic mistake and kind of never get back into the market. All right, the next question, Michael, what role do you think cryptocurrencies will play in the future? Will there ever be something in Baird's offerings? So we are being super thoughtful about this. And I myself, I'm trying to be super thoughtful also. If you go to Baird's YouTube channel, I've done 3 videos on there. Your advisor can point you to those, or you can go to Baird's YouTube channel. I've just trying to simply discuss what Bitcoin is and what it might be and kind of why it is where it is today. So I do have some really good kind of simple, quick videos on that you can go check out. The role of cryptocurrencies, it's tough. We're still waiting for kind of guidance from regulators. Good products, right? We don't want to take a product to a client that's bad or that might perform poorly. So we need to be thoughtful not only about regulators, but the products themselves. And how do they fit, right? This is a financial management. This is a financial services firm. This is a wealth management firm. This needs to be able to fit into a plan, okay? It's not like we want to just own this because it's hot and it goes up. Like, that's a bad reason. It needs to be able to fit into a plan. So when we have the right product and the right guidance and it fits into a plan, then we can come to our clients with a good product and good guidance on it. Right now, we're just trying to be as educated as we can be. I, for one, this is my opinion. Okay, my opinion. I think it's here to stay. I think of it a lot like the dot-com stocks at the end of the late 90s. Most of them went to zero, but some of them survived and became something. Amazon's and eBay's. Not all of these are something. Some probably will be. We don't know which ones those are. But I think right now the best thing you can do is just essentially be kind of educated on the topic. So once good products become available, you can have good, deep, meaningful interactions with your advisors about it, because what we don't want you to suffer from is FOMO. Something's going up over there. Should I go bother with it? Just kind of be careful about that. You know what I mean? That's what's called FOMO, fear of missing out. It's a human emotion, and it's a really hard one to manage. It's a really, really hard one to manage. Don't chase things kind of just because somebody else might be doing well in it. Okay, what's the title of the book again? Atomic Habits. Atomic Habits. I think that's a great book. There's another book that I have that I read every day called The Psychology of Money by Morgan Housel. Go read that too. Those are my two recommendations for you. Atomic Habits, Psychology of Money. Read both of them. They're fantastic. I got that. My son is just becoming an investor. Where does he begin? Can you suggest a game? The best way to be interested in becoming an investor, I think, in this current version of the world is to kind of consume blogs and podcasts. Because I think those are the smartest, most interactive ways to learn how to become an investor. Like books are books. I would recommend that, my friend, that he read Psychology of Money, your son. I would send him to read The Psychology of Money. I think that's the first book every investor should read. Hands down, first book. Read that. When he's done with that, talk to your advisor. I'll get you some podcasts and blogs for him to read, because that's where the best content is now. That's where I occupy. You don't want to read some book from the 50s and 60s. Things change so fast. We want to be kind of modern about this. So it's very, very important to stay with the right kind of venues and topics. Let's do two more here, Scott, then we'll move on. You said we should not be all in or out of the market. I'm managing an older mother's Baird account. This is invested 60-40. She's living off investments. Should she be willing to pull almost all of it out of the market at this time? Doesn't have the longevity to recoup after a crash. When it boils down to it, all investing, my friends, all investing, all of it boils down to just one thing, and that's timeframes. You could boil all of investing down to those two words, timeframes. What are somebody's timeframes? This is an asset allocation question. This is a great question for your advisor. Should you pull out because you're 97 and there might be a crash? Well, there might be a crash any year, okay? Any year. Going forward, any year there might be a crash. Going forward, the stock market might fall 15, 20, 30%. That's essentially that's what history tells us. The stock market falls 15% on average every single year. So if that's going to impact her life and it's going to impact her financial plan, then yeah, you should be talking to your advisor about, do I have the right allocation? That's the question you're asking here. But I don't encourage market timing. Imagine you pulled out of the market over the last 3 years. You missed plus 31, plus 18, and plus 29. Those are three of the best years in history. There's no great answer to this question. All investing comes down to how long and how much can I handle risk. That's really at the heart of all investing. I'll do one more. Let's see. What are your thoughts about bonds with inflationary pressure? We're told to balance stocks versus bonds, but buying bonds today feels like locking in a loss. Here's how I view bonds, and you should probably think about it in this way. Also, bonds are kind of the ballast in your portfolio. They're the anchor against the equity market. Okay, they're the anchor. When the equity market roils, bonds do well. They act as the anchor, the kind of ballast. Are you getting income out of them? No. I mean, that's just how the world is now. The 10-year note is 1.8%. Inflation 7%. You have a real loss holding the treasury bonds. But when the stock market goes haywire, people are going to rush into those bonds. Think of it as your ballast, your ability to sleep at night. If you're 100% in equities because bonds are a loss, and then equities go down, you've pushed your boat out into the ocean to be rocked when the storm hits. The bonds are the ballast in your portfolio. Fixed income strategy is really important. We have some really talented people in Baird about that. If you're worried that you're in the wrong kind of bonds, reach out to that advisor. Maybe there's different things you should be looking at. We have really, really good fixed income strategists, and that's part of this game. But think of bonds as your ballast. Okay, when you remove ballast, you're putting yourself at risk. And cash, remember, inflation is just destroying cash completely. So if you're in cash, remember, $1 million in cash, you're losing $70,000 a year right now to inflation. 70,000. That's a guaranteed loss to inflation. Okay, it might sit in your account. You might think that that's great. It's not in the equity market, but inflation is eating away at it every single day. 7% inflation is really high. If you're worried about that kind of stuff, again, great planners, great strategists here. Before I kick it back to Scott, I want to thank you guys for coming. This has just been great. There will be a recording available of this. If you missed any part of it, if you want to revisit it, if you want to send it to some friends. Look, I'm like, when you think about Baird, when you think about events, I'm going to be the guy that's telling you stories and teaching you about your behavior. That's going to be my style, okay? So if you're looking for those kind of events, I'll be doing plenty of them. If you're looking for kind of more technical, really nitty gritty stuff, we have this Arm Strategist and this analyst Ross Mayfield. Great stuff, fantastic stuff. Okay, but I truly believe in my lane that I occupy, that it all boils down to your behavior, all of it, all of your success, all of it. It boils down to thinking yourself as the mountain climber. Leave here today with that. Have a plan, adapt along the way, learn to live with fear. You do those three things. If you leave here today, I promise you, you will be successful. I promise you. And then watch less news and walk more. All right. Thanks so much, Scott. I'll kick it back to you.
Yeah, thank you, Michael. By the way, in tribute to your comments today, I'll be taking a walk outside here in just a moment just to de-stress a bit. But want to thank you for your time. Everybody on the line, thank you for joining us here today. And I hope you found this information impactful and a great use of your time. As Michael said, for those of you that would actually like to review today's presentation or share it with a friend, family member, or colleague, we've recorded it and we'll be making it available through your financial advisor in approximately a week. And if we weren't able to address your question, or 5 minutes after you get rid of this, you think about something else you would have asked, again, please reach out to your Baird contact and they'll connect you with the appropriate resource to get your question answered. Now, next month, we're going to have another Baird Wealth Strategies webinar on February 16th. It's going to be on the topic of technology, so look for that invite coming soon as well. And again, thank you, everybody. Enjoy the rest of your afternoon. We'll see you in February.